All right. Hello, hello, hello. Thunder. That's a great walk-on song. It's like thunder. It like comes with lightning. It's kind of like an electrolyzer, maybe. I don't know. Okay. So we're talking hydrogen today, which is very exciting. I love National Clean Energy Week. So first of all, just a big thank you to the whole CREST team for putting this together. Heather, Christina, Rebecca, Michael, Ashley, the whole gang. You guys are amazing. We are starting off with a little bit of wisdom from the crowd. We're going to see what you know, which maybe is not fair because like the hydrogen experts are right here, not necessarily right here, but right there. But you have 3 questions to answer. So if you haven't, please do that quickly. We are going to take a look at your answers in just a second. And then after that, we're going to actually figure out what the real answers are, where this industry is heading. So let's go ahead and take a look at the first question. So question number 1 is, which region or country currently has the largest clean hydrogen production capacity, both operational and under development? And let's see, I can't see on here what people voted. The app does not tell me that. All right, so I'm going to have to all right, so people said, people are still voting. Oh, it's very exciting. All right, so the wisdom of the crowd looks like that A, China is what you guys think. You think North America is coming in second. You think Europe is third, and you think the Middle East is fourth, which is not correct. I'm sorry to say, or maybe I'm not sorry to say. So it turns out that North America, both the US and Canada, accounts for 2.4 million tons per year of clean hydrogen projects if we're including both operational and under development. China's in second with 1.6. However, China outpaces all other regions in renewable hydrogen capacity. So there's a difference in which types of clean hydrogen. All right, that's who's making it, which is great. Making hydrogen is a piece of the puzzle, but who's buying it? Where's the demand? So let's go ahead and take a look at question number 2. It'll pop up in a second here. So by 2030, right, time scale is important. By 2030, which region is expected to account for the majority of global clean hydrogen demand? And we, the group, think East Asia is number 1, US is number 2, and the EU is number 3, which, according to the Hydrogen Council, is again not correct. Europe is the number 1 answer for projected demand globally by 2030. EU accounting for 65% of demand. Asia comes in second with 25% of demand. US, 10% of demand by 2030. All right, last question, and I believe in you. I believe in you. This time we're going to get it. So we figured out where the demand is. Maybe an even better question is, what is the demand? How are we using this hydrogen? Like, what good is it? So today, as of today, which sector represents the largest share of committed clean hydrogen demand through binding offtake agreements? All right, the crowd thinks ammonia comes in number 1. That aviation fuels comes in 2, and it's ammonia including fertilizer. That's important, right? Power generation 3rd, and oil refining last. And this time you were right. Your number 1 choice is correct. Ammonia production, including fertilizer, is in fact 43% of existing offtake agreements. Refining comes in second. And then we've got power third and aviation fourth among these, but those third and fourth are right on top of each other. Okay, so we got a little bit of a background, right? We're not coming in fresh. And here we are. We've got Clean Energy Week. We've been talking carbon capture, nuclear, geothermal, renewables. What percent of the solution is going to be hydrogen? I don't know. I don't know the answer. But I do know hydrogen is the first element on the periodic table. So it's definitely number one in at least one sense. I would like to introduce you to our amazing panelists here. We're going to start closest to me and go farther on. First off, we have Shannon Angielski. She is the president of the Clean Hydrogen Future Coalition and principal at Ness Feldman. Next, we have Paul Wilkins, vice president for policy and government engagement at the Electric Hydrogen. And last, on farthest from me, Jessica Olson, who's the head of global affairs at Topso. So the first question to all of you is who are you? What is your organization/company? Why is it that you're focused on hydrogen right now? Shannon, first to you.
Thanks, Dan. And thank you again, Chris, and the excellent National Clean Energy Week. It's been an education as well as a great networking opportunity, but also I get to sit with expert panelists and friends and colleagues as well. So the Clean Hydrogen Future Coalition I serve as president of, and we were founded back in 2020 at a time when there was very little focus on clean hydrogen and nobody was calling hydrogen clean hydrogen. There were so many colors of the rainbow out there, and a lot of, I would say, a lot of policymakers not really understanding the tool that hydrogen can serve to, one, decarbonize, but two, also be another fuel source and an energy source. And so we were founded to come together to bring the full ecosystem of low-carbon hydrogen suppliers, the midstreams, and all of the end uses, which today really is predominantly in ammonia and oil refining, as Zan pointed out. And so there are so many other end use sectors. So we were really bringing together a growing ecosystem. And our mission is to try to advance policies like the 45V, which we'll be talking about today, and other policies like the Clean Hydrogen Hubs to help scale that industry both nationally as well as globally. So I'll end there because
Amazing.
There's a lot we can talk about.
Paul, over to you.
You bet. Zan, thank you so much. Thanks to my fellow panelists, everybody here at CRES for a great conference. Also, I was pretty excited about our walkout music. When I tell my kids, they're going to think I'm a lot cooler. So, Vice President for Policy at Electric Hydrogen. Electric Hydrogen is an electrolyzer manufacturer, and we were founded also in 2020, just 5 short years ago, with really one mission. And our whole mission is clean hydrogen, especially electrolytic hydrogen, is still too expensive, and to make it cost competitive, which all the things that you use hydrogen for are commodities. Hydrogen's a commodity, hydrogen derivatives like ammonia are commodities, and so the only way to crack that market is you've got to bring down the cost and you've got to be cost competitive. And electrolyzers today are too expensive, and so our whole mission as a company is to make the lowest cost electrolyzer that can operate flexibly to run off the lowest cost electricity for the lowest cost hydrogen. That's the mission. We've made some innovations in PEM electrolyzers. We've proven those innovations at the lab scale, at the prototype scale, at a 10 megawatt pilot plant, and we're actually constructing now our first 100 megawatt plant in Pecos, Texas, where our customer will be making eSAF. So we manufacture the systems here, and we're trying to scale up the supply chain for electrolyzers.
Amazing. Just before we go on to Jessica, I want to make sure everyone is on the same page here. What is an electrolyzer?
An electrolyzer is a machine that uses electricity to split water molecules, H2O, into hydrogen and oxygen. They've actually been around a long time. It's actually how we used to produce hydrogen before natural gas became ubiquitous in the US. But then when natural gas came along, it was just cheaper to do it that way. So electrolyzers have been around for a long time, but they need innovation and they need scale.
Terrific. Jessica?
Thanks, Anne, and great to be up here with friends and colleagues who are helping us on all of our policy advocacy we need to kick this industry off the ground. So Topso is an 85-year-old startup. I'll hold. It's fine. We were founded in 1940. We are headquartered in Copenhagen, but we have been in the U.S., in Houston, since 1960. Our bread and butter technology is catalysts. And so these catalysts help chemical reactions happen in different, more efficient, lower emitting ways. That is really the bread and butter of what we do, is chemistry. And with that chemistry, we've become a leading technology and solutions provider to a number of sectors that hydrogen and its derivatives touch. So we are in about 82% of the ammonia being manufactured in North America. About a third of the world's hydrogen and ammonia run through our solutions. And we are providing technology to about $40 billion worth of investments in the US. So we have a significant and long-standing footprint here. And we, in terms of the energy transition, our technology is being used in every fossil with capture project in the United States right now, and a few in Canada as well. So really excited to be on the leading edge here and talk about how we can get to scale.
Amazing. I love just like imagining like you guys have this giant garage that you're working out of. Like
it's a little more sophisticated than that.
Yeah. Okay. But the startup mentality, it's there. Paul, so we got these electrolyzer things, and they've been around for a while. But there's probably progress we can make. So tell us a little bit about your technology and what we need to do to make these things efficient, durable, really work well, make the economics work out.
So there's a couple things. Our founder and CTO is a gentleman named Dave Eaglesham. He was actually one of the first CTOs of a company called First Solar. And so he came at it, he's a physicist, and he came at it from sort of a first principles approach. What do you need to do differently to make electrolyzers cheaper? And there's really three things. So the first thing is wonky, current density. You need to increase the current density. Don't worry, in layman's terms, that just means you got to squeeze more hydrogen out of each unit of capacity. And there's a whole bunch of IP-protected ways that we're doing that. Second thing we're doing differently is modularity. So electrolyzers have been kind of this cottage industry out there for a long time, used in applications like in nuclear-powered submarines. That's how you get oxygen, is from an electrolyzer. But they haven't really been done at scale. And so we make the entire electrolyzer, which is just one piece that you need. You need all the balance of plant, so think power electronics, pumps, compressors, things like that. We essentially sell a chemical plant in a box. And so we prefabricate all of those on skids to squeeze out EPC cost so that when we ship the skids to the customer site on the back of semi-trucks, the customer doesn't have to do any welding. And if you look at IEA's numbers for what's driving the cost of electrolytic hydrogen, about half the cost of projects, the CapEx, is driven by EPC cost. And so if you can do more of that in the factory and less of it in the field, you're squeezing out cost. Third thing we're doing different is scale. So like Henry Ford, we offer one product, and if you want a 10 megawatt electrolyzer, we'll sell you a 100 megawatt electrolyzer, because that's all we do is make 100 megawatt electrolyzers. Because you really have to be at that scale to make the economics work. And so we're driving up the scale. Those are kind of the three big innovations that we're bringing to the technology.
All right, amazing. We got the Model T electrolyzer squeezing more hydrogen out of every bit of unit that we've got. Okay, Jessica. So the question that the crowd got right was what sector the hydrogen is going to, ammonia, fertilizer. So my question for you is, you're thinking about the opportunities in the US. We've got hydrogen, we have the ability to make hydrogen, we can export low carbon fuels like ammonia, methanol. What do we need to do to actually capture that market share globally?
Yeah, well, keeping 45V in place was a good starting point for that. It's not the end point. It's only in place for another 2 years and handful of months. But it's a huge advantage for projects that are in the pipeline, of which there are many. And you look at the potential opportunity in places like the Gulf Coast. You know, Exxon's got the world's largest, what will be the world's largest hydrogen plant that they're looking to take FID on down there. And, you know, they've got commitments for offtake in Japan with Marubeni. You've got CF Industries that has already taken FID on their plant in Louisiana. Again, Japanese offtake. And investments like these are underpinned by these critical incentives. They're not incentives that we're going to need forever. But if you look at the example of how China has scaled their green methanol industry, methanol being a derivative of hydrogen, they pumped a lot of incentives and subsidies into it, as they do. But now that green methanol is at scale, the supply chain is established, and they're not subsidizing it anymore. And the cost of that green methanol is cheaper than gray methanol in North America. Think about that for a second. They've made the leap there, and it's because they committed to that pathway of reliable, certain incentives for these companies to invest and get that supply chain to scale. That's what we need to do here. We have a project pipeline that Crest put out a wonderful report and analysis on, showing that when these projects move forward, you're looking at a potential $12 billion of annual GDP just from the projects we have now, and over 60,000 jobs to operate these facilities. And the offtake for that is mostly global. I mean, there's some, of course, domestic demand in refining and other sectors, but the EU is going to need a lot of this for their own fuel security, for their own energy goals. Japan, same landscape. So we have an incredible opportunity here. We got to keep going with these consistent, longer-term policy signals so we can make the investments we need to bring these projects to reality.
Terrific. So you mentioned some of these policy incentives, 45V, that's the clean energy tax credit specifically for clean hydrogen production. Shannon, I'm going to come to you just to ask, just scene setting, like, what are the current policy tools that we have right now that are helping clean hydrogen? How are they going? How are they working? And we'll get to what else we can do next.
Okay. Obviously 45V. And 45V is a clean hydrogen production tax credit, right? So if you think about certain sectors that are going to use low carbon or clean hydrogen, Paul mentioned the cost of it, right? Like, we are trying to bring down the cost of production. And when you think about it, today, roughly the cost of hydrogen in the market is about $1 to $1.50 a kilogram, right? And that market is being driven by existing use cases for hydrogen, which is in either ammonia or refining. So when you think about what that $1 to $1.50 means in terms of an actual energy content cost basis, if you just look at like replacing it with natural gas, that's roughly $7.50 in MMBTU. And so even, you know, we're looking to inject hydrogen into new sectors, and one of the reasons why we have 45V was to try to help bring down that cost in order to be more cost competitive in some of those sectors and end use cases. And so that's one objective of that tool. The other is that we need the hydrogen hubs, for example. So one of the reasons why we, as an industry, looked at and really focused on designing a hub concept and having the Department of Energy implement that regionally is because economies of scale, right? So we don't yet have a robust supply chain, as just mentioned, that can really help to reduce costs because we don't yet have a full-scale network here in the U.S. And so when you actually look at doing this in a microcosm or in a regional basis where you locate supply with the potential end use or demand side, that actually helps to keep costs lower. And then at the same time, and I would argue that I think the hubs have been already successful in this regard, is that we're mentioning that there's some end use cases that these sectors haven't all yet really worked together to get to know how to transact together. And I think the hubs have already done a really good job of bringing a lot of these regional entities, organizations, companies together to try to figure that out, even before all the money is coming out of the department to actually fund projects. But what that money will do is actually go into reducing the cost of capital as a grant, right? So, and that's really helpful when you're looking at financing these. You're lowering the capital needs for, financing, which is one function of that. And then the other is that the imprimatur of the federal government for these hubs is really something that, will if you're an investor, you're looking at this, okay, the federal government is underwriting and supporting this hub and these projects in the hub, and that will help to also attract, the investment that's needed. And then you combine it with 45B. Those are the main tools that we have. And there's some other tax credits out there for fuel cells, and we've had the electrolyzer investment tax credits. There are other things like that, and some other things that could really be helpful.
Okay, great. Jessica, back to you. You have a global portfolio, right? So, kind of thinking globally, what lessons can the U.S. learn from Europe, Asia, the Middle East, that could be helpful as we think about how to strengthen our competitiveness in clean hydrogen and, low carbon fuels?
Yeah, there are a few things. One, we already mentioned the scaling of the supply chain in China. So policies that help us do that in whatever jurisdiction are going to be the most helpful, right? Reducing the cost of capital. It's also the demand pull. What we're seeing in Japan and Europe in particular, but in other places as well, they want these cleaner fuels. Whether it's hydrogen from electrolysis or hydrogen from natural gas, which is certainly plentiful in the US, we have way more of it than we can use. They are looking to the US as a way to supply that demand and enhance their own energy security. So they have been thinking about policies to drive the demand coming to their regions. Mechanisms like a contract for difference auction, where you weigh the market price of the gray fuel against the lower carbon fuel, and the government steps in to close that gap for you so that you can have a long-term demand signal that projects stateside need to be able to move to final investment decision and invest that capital with confidence, right? Everybody wants to know they're going to have a customer. So long-term offtake agreements, ways to bridge that difference in the cost. And these have to be long-term, and they have to be consistent. We can't go back and forth. One day we've got the scheme, the next day we don't. So that long-term demand signal is critical in making sure that our U.S. projects get off the ground and can supply that demand.
Paul, over to you. So, I feel like there's people who are very bullish on hydrogen, maybe glass half full kind of mentality. And some people are kind of down on hydrogen, glass half empty sort of mentality. My question for you is really, I feel like this discussion has highlighted all the opportunities, the global demand, the economic opportunity available to us, the technological innovations that we've had. What's holding us back? Well, what are the barriers? Like, what's preventing us from getting to that glass?
Great question. So many folks in the audience are probably familiar with the so-called hype cycle of new technologies in the energy space. And, I'd say 2 or 3 years ago, we were sort of at the peak of the hype cycle. Now we're down, coming out of the trough of disillusionment, I would say. People are looking at hydrogen and saying, well, is it ever going to scale? Is the cost ever going to come down? And I think what we're starting to see, using Jess's example of Chinese green methanol as kind of the perfect example of it, we're kind of seeing that the costs are starting to come down, and industry is starting to scale, and so we're starting to come out of that trough of disillusionment. A big factor in why we're starting to head in the right direction, but why we still could get off course, is there's been an incredible amount of policy uncertainty. If you look at 45V, seems like it is going to be this great policy for the industry. The Biden administration kind of sat on their hands and didn't finish it until the 11th hour in January of this year. Then there was uncertainty, would Congress keep it as they went through the One Big Beautiful Bill? We finally have certainty on that. And unfortunately, that's not unique to the US. We're seeing the same thing in the EU. So the EU has really aggressive policies for hydrogen to require refineries to start to use cleaner hydrogen. But the member states actually have to transpose that into their member state law. They're just starting that now. So all of those things kind of put together are creating the demand signals that projects need to actually get financing. So I would say the biggest barrier for the last couple of years has really been policy, but we're starting to see some of that policy finally fall into place.
Okay. So the biggest barrier is policy. Shannon, I'm coming back to you. And since we're on the policy topic, we've kind of talked about what exists. What else do we need, right? Like if we're saying, all right, let's actually go to Congress and say, hey, let's all be sensible here. We can do a bipartisan bill and make this really work well. What are the asks?
So aspirational, maybe a little potentially provocative, and maybe not something that we could do right now. But I would just at least say, here domestically, we don't have anything like some of these other countries have, right now anyway, that might drive that demand for low carbon hydrogen in various end use sectors. So you could look at something, our members would say a low carbon product standard, right? Or a low carbon fuel standard, something national, right? That would be a real driver. But I realize that's not the ask today, right? So if we want to continue with 45V, but let's, we got that done right now, and we have at least the implementing regulations in place, which also took a while that led to that uncertainty. What is Congress going to do? What are policymakers going to work on, maybe is how I would think about it. And so if we've had a lot of talk over the last day and a half about permitting and permitting reform and the need for infrastructure certainty around investing in infrastructure. And so clearly permitting reform is certainly something that an industry that needs to scale could benefit from. This is a lot of infrastructure we're talking about, the need to build out. There's a number of things you could look at. Just streamlined permitting is always on the table for everybody. So in addition to that, if you're looking at hydrogen, right now if you wanted to build, for example, a hydrogen pipeline, you'd have to go to each state and get it permitted and constructed. You could do an interstate federal pipeline regulation. The National Petroleum Council actually recommended a program and a policy design for how to go about doing that. So that's one thing that could get done. When you look at federal permitting, obviously NEPA, it's the hot topic, but there are unique things you could do. You could maybe, ask for a categorical exclusion for certain types of hydrogen-related infrastructure, right? I mean, some unique treatment to the hydrogen industry to allow it to scale. So there's certainly things that you could do within the context, I think, of what Congress may actually work on in the near term. And PIPES Act, there's some actual blending of hydrogen studies in the draft, or I should say the bill that was introduced. So I think we're going to see some things move forward, but those are more of the piecemeal things that target various aspects of this whole ecosystem, and that's why I thought I would start with the aspirational, yet provocative beginning, this one standard type of thing or something like that would really drive this forward.
All right, so are we surprised that in our hydrogen panel, permitting came up? I'm not surprised. I think it's a big deal. I think it's been a theme throughout National Clean Energy Week. And I'm very optimistic that we can get a permitting deal done that is very helpful. We heard from, last night from Chairman Westerman and Congressman Golden. We know that there's action in the Senate. I'm optimistic. I think we can do this. Last question, and then I think I'm supposed to open up the questions to the audience. Just kind of quickly, thinking about the U.S. and how we might use hydrogen. And we're thinking about, our competitiveness, our national security, our industries. Kind of quick answers. I want all of you to answer this just kind of quickly if you can. Like, how do you see the U.S. really utilizing hydrogen to our advantage? Paul, it looks like you're...
Jump in, yeah. I would say don't just think about it in terms of how would we use hydrogen. I would say think about it in terms of how our trading partners will use hydrogen. The message that I would want to drive home is there's a lot of demand globally for clean molecules, right? The UK and the EU both have policies that are driving the adoption of eSAF, so hydrogen combined with captured CO2 to create kerosene for jet fuel. The EU has policies driving adoption of hydrogen in the refining sector. Japan has policies driving adoption of ammonia and hydrogen in thermal power plants. Those are all trading partners of ours. They all have demand for clean molecules, and somebody is going to supply that demand. China is moving aggressively to be that somebody. We need to build projects here so that we can get scale, keep ahead of them on the cost curve, because if we don't, we won't continue to be the #1 producer of clean hydrogen for that long, because it's the early stage. This is like 2016 in the LNG market. Somebody's going to capture these markets, and we need to move quickly to be that
That's an
somebody.
interesting way to think about it. Jessica?
Now Paul's made me very excited about my closing statement. The United States has the capital, the infrastructure, and the talent to dominate this global market, which the Hydrogen Council, a CEO-led organization, just came out with its latest global market analysis. There's already $110 billion in committed capital over 500 projects in low-carbon hydrogen, and we've got expected demand just from the EU, Japan, and the United States that could be more than 8 million tons per annum by 2030. This is a huge global market that the U.S. can leverage its natural resources to capture, and we should.
I would just add, if you look at the hydrogen hubs and what most of the use cases were in the hubs, and depending on regionally where they were located, it is for a lot of existing use cases, right? So it's replacing the gray molecules with the lower carbon molecules. And so a lot of that was in fertilizer, ammonia, right? Less so in refining. And then there's some other scattered use cases. So I think, and a lot of that is domestic. So, but I will also say too, and I just want to add this quickly, one of the things that really got bipartisan support was this global commodity market opportunity for the U.S. and to not sit on the sideline. And that actually, I mean, whether you're Republican or Democrat, these are, you're going to produce here and export. I mean, we have to get in that market. And that was something that really resonated to help us build up the support that we needed, at least in the OBB, and in testing that with Democrats as well. I mean, so I think that if we have the policies and the tools that will enable U.S. industry to actually compete in that market, we'll see the use cases here grow as well.
All right. Now the responsibility lies upon you to ask good questions. Let's start at 1 and then 2. Yep.
Thank you. With the majority of the global offtake being focused on the European Union and Japan, we know that there is a lot of countries that are vying to supply these markets. When you look at Namibia, Oman, Saudi Arabia, I'm wondering whether the amount of resources that it would take to jumpstart the US hydrogen economy would be worth the effort.
All right, great question. So there's competition for who's going to supply. Is it worth the U.S. investment?
1,000% yes.
Yeah, I would just add, think about it in the supply in 2 aspects. One, are we producing the molecules here and exporting the molecules? And if you look at what does the U.S. have? We have a whole bunch of really cheap natural gas, so you can make low-carbon hydrogen very cost competitively. And then in certain regions of the country, you have low-cost, high-capacity factor clean energy or clean electricity for electrolysis as well. So the U.S. can be competitive in both of those routes for exporting the molecules. But I would say also don't forget about the technology piece. Like, who's going to be the vendor that's selling the technology, whether it's the catalysts or the electrolyzers, to all of these projects globally? You know, who's going to be selling to, and you're right, Oman, Algeria, Morocco, some of these jurisdictions, you can make really cheap electrolytic hydrogen. But is it going to be China supplying those electrolyzers? Is it going to be Germany? Is it going to be the U.S.? And so policies that create certainty and scale here allow us to answer yes to both the molecule export opportunity and the technology export opportunity.
That's a really good point. Multiple things. Selling the clean hydrogen itself, but also all the technology behind it, where we've historically been, a leader in technology development. Over there.
We actually have an online question we're going to go with.
Yep, right here.
Okay, one online question and then over there.
Okay, this
Great.
is primarily for Paul. Could you talk a bit more about your electrolyzer technology and its advantages, especially as opposed to the alkaline technology used in most Chinese electrolyzer manufacturing? Very wonky.
So, great question. The two sort of furthest along commercially electrolyzer technologies are alkaline, which is actually the oldest type of technology. That's the technology that used to exist before we used natural gas to produce hydrogen. And then PEM electrolyzers, which are also have been around for decades, pioneered here in the US by NASA and DoD and others. One of the key advantages of PEM over alkaline is its flexibility. You can ramp the systems up and down. Alkaline, you have less ability to do that. Additionally, a big advantage is you can increase the power density of the electrolyzers. So like a 6 megawatt electric hydrogen electrolyzer the stack itself is around the size of a large refrigerator. A 6 megawatt alkaline or a 1 megawatt alkaline system, you have to put on the back of a semi-truck trailer to move it around. So it's much more material intensive. It's a more mature technology, so they are generally cheaper, although our systems, we're selling them today for cheaper than China can sell, our Chinese competitors can sell alkaline systems in the West today. So we're ahead of them on cost, but we've got to keep scaling to stay there.
Great.
Hi, Siri Hedreen. I'm a reporter with S&P Global. My question is for Paul and Jessica. How hopeful are you that, or do you have any hope that Congress will extend the 45E credit beyond 2027 in a couple of years? And assuming that's something you want to see happen, like what will it take to convince lawmakers to do that?
Thanks, Paul. I always have hope. You have to in this business. But, I think Congress has a lot of really difficult issues ahead of it. I think it's a very exciting and dynamic time right now in the U.S. clean hydrogen industry because, as Paul talked about earlier, this is the first time we really have certainty around that 45V tax credit. So I think you're seeing a lot of projects in the pipeline, take that seriously and put the pieces together and look at the global demand as they move to final investment decision. When those projects move, we're going to have more proof points to bring to Congress to say, look, this industry is growing, it is scaling in the US. We need this incentive to continue. So I think the justification for the credit will become increasingly apparent as those projects move forward. That'll help.
All right, we are almost at the end of our time. I'm going to give the panelists like 20 seconds each for just final thoughts. I like to end on time. I'm a permitting nerd. It's important to me. Shannon, let's start with you.
I think one of the things that I would like to at least leave you all thinking about is at least the export opportunity and where the demand centers are that's creating this market opportunity here in the U.S. That's certainly something that is going to be a major driver, I would say, for this industry and in particular for the U.S. to actually compete. But with that, we need the policy and the durability of policy and the bipartisan support that we'll continue to try to generate is something that we're going to be doing a lot of work on to maintain that.
Perfect. Paul?
Just quickly say, 3 years ago at the peak of the hype cycle, hydrogen was perhaps overhyped. It is, it's not a pocket knife. It's not the solution to every challenge in the energy transition. But there are certain sectors where hydrogen is the best solution and cost competitive. So ammonia, fuels for maritime and aviation, things like that, it makes a lot of sense. And we're starting to see real progress in scale and bringing down costs. And so we just need to stay the course.
Perfect.
From a policy perspective.
Final word, Jessica.
Stay the course. Don't be alarmed by the natural attrition that's happening now in this industry. We are seeing projects that didn't have it really all together fall away, but the stronger projects will continue. I mean, there is opportunity in this. We've there are myriad reasons why. I think we should stay hopeful.
Wonderful. Thank you so much. You guys are amazing. Everyone, please give a round of applause to Shannon, Paul, and Jessica. Amazing.